Hi guys, it has been a long time, so I thought let's do one more video on current market outlook. There's a lot of news flow right now. There are bad news flow. There's good news flow. Mostly the news flow is bad, but the opportunities amid the bad news is really good. So I thought let's have a quick chat on the current market outlook. Right. So let's begin. Guys, basically, I'm talking about Nifty and Bank Nifty right now, and uh, talking about Sensex in context to Dow Jones, Nasdaq, S&P 500, and other global markets. So I feel that there isn't a lot to worry, although there are headwinds right now, there are problems right now, but the best opportunities comes at a time when there are a lot of crisis. So Dow Jones is trading at 52-week low, right? That's a price which is even lower than June low, which we made a while back. Like in June, we had made low of around 15,200. So Dow Jones is now even trading below that price. So you can have a comparison in mind, like how significant is the correction in US market, and the biggest correction right now which has been seen is in tech stocks in USA, like stocks like Meta, which is a new name for Facebook, is down big time. Snapchat is down big time. Now even the big companies like Apple has also started cracking down, and so Nasdaq itself has underperformed the market and has shown relative underperformance, and a lot of weaknesses there in individual companies. But recently, if you see, then number of stocks hitting new 52-week lows have reduced in Nasdaq components. So that's a very good sign, and that's a little macro picture, a brief about the technical picture. But now coming to the macro picture, and what exactly is happening in the macro lens, like in macro perspective. So the biggest worry for the market had been inflation, right? We had inflation figures which are as high as we had seen in last 40 years in USA. Highest inflation in 40 years in USA, highest inflation seen in 40 years in UK, highest inflation seen in last 40 years in Japan. So a lot of developed economy, even in Europe, mostly because of skewness in prices, which because of abnormal pricing in commodities, because of Russia-Ukraine war. So that was the trigger point, which because of which inflation shot up. But prior to that, the fundamental problem was that central banks across the globe had printed a lot of money. Because of that, excess money supply had been created in the economy, and if you remember, then USA had distributed $2,000 to their citizens, and in various installments they had distributed money to their citizens. Even this happened in other parts of Europe as well. So what this created is that it created a lot of free money, and uh, you know if you look from different perspective also, free money always goes in drain. Nobody uses free money in a productive manner. Most of the people don't use free money in a productive manner. So that free money went into cryptocurrencies. Cryptocurrencies have crashed. That free money went into a lot of technology stocks. Technology stocks have crashed. Mostly this money was put into discretionary spending, like people purchased a lot of iPhones and did a lot of such purchases, not productive, purchases, unproductive purchase where the value erodes over a period of time. And also they made investments in stock markets and cryptocurrencies. But the important point to note is that they invested at a time when money supply was huge, and what followed after that was huge correction. So the point is that excess money supply created inflation to a great extent. And the trigger point was Russia-Ukraine war, geopolitical tensions, which took inflation to next level. And because of that, uh, crude oil prices had shot up, copper prices had shot up, agri commodity prices had shot up, and the most important element of inflation right now is energy cost. So although price of crude oil has corrected little bit from $120 to 190 $80, but pricing in Europe is still very high because of that. Because of this extra normal prices, because of inflated prices, European economy is still in a lot of mess. uh, a lot of statistic, a lot of estimates by World Bank is saying that countries like UK would be in recession, countries like USA would be in recession. A lot of statistic is saying that. So definitely news flow is negative. There are concerns. Bond yields have shot up to such an extent like which haven't been seen in even in 2008. So that's a reason to worry, definitely. But on the other hand side, if you look, Indian markets are really the showstopper. They haven't fallen as much as the US market have fallen. So just imagine, if I talk in context of Indian market, then uh, Dow Jones has even gone below 15,200. Like June low of Nifty was 15,200. So accordingly, Dow Jones is at 15,000 levels. 14,800. I'm talking in comparative terms. And let's come back to Indian picture. So we are trading at 17,000, much higher than 15,200. So that's really amazing. That shows very good outperformance by Indian market. And that isn't something which has been out of air, like which cannot be justified factually. It what This is like true reflection of economy. So our forex reserves are very good compared to other countries. Then chances of recession in India is much less. I just paused this recording because a lot of noise is coming from outside. Uh, a lot of Garba songs are playing outside. So please pardon me for that. I've tried to create a raw video this time. So please pardon me for the noise and disturbance which is coming from outside. Coming back to the topic. So I was saying that Indian economy is trading at Nifty is trading at 17,000, which can be justified factually because World Bank says that chances of recession in India are very less, right? Which makes Indian economy really stand out. And second, inflation is very low. Recent RBI meeting said that developed economy might be having a hard time. Uh, they might then they might not be having soft landing. But Indian economy, on the other hand side, is ready to take off. So that is really impressive. Central banker Commentary of central banker is confident. Uh, Whereas the peers like the global economies, like developed economies, are in panic. They are searching for solution. But our country is really confident. Our officials at RBIs are very confident that our economy would do well. So that instills the confidence in investors. So these are some of the things which are really good, and our GDP growth rate is fastest in the world. So these three elements makes our economy really stand out, and because of which I think that there may be turbulence in the short term, but in the long run, our economy will definitely outperform. So at 17,000 levels, we had a stellar rally on Friday. So if those levels are respected, like we had 16,800, 16 750 or so levels on Nifty as the low, which are important support levels. If those levels are respected, then probably we can expect a rally till 17,300, 17,500, 18,000. And in good case scenario, in best case scenario, what is market ruled by? Like, market is ruled by demand and supply. It's a function of demand and supply. So FIs had been net seller in recent times, in last 7 to 8 days, when markets corrected from 18,000 to 17,000. They recently bought little bit on Friday. So if the buying continues, then probably we can also see 18,500. But if levels of 16,700 are broken, then probably we'll also go down a lot. We'll go really down along with global pairs like USA, Dow Jones, Nasdaq, etc. So there are certain headwinds, but if US markets rebound as they are in very oversold territory, then we can see a really good market in India, like really bullish market. And one more thing is that US markets are so oversold, and the kind of short buildup seen in USA is so huge that it is even more than 2008. So, in case market moves against those short sellers, then they would be forced to cover their short position, and that would create such a phenomenal rally that we can't imagine. So, like after 2008, we saw a stellar rally in 2009. So I'm talking about this scenario where they are forced to cover their short positions. Second, FI short buildup in derivatives is 87%. So they had short buildup of 85% in June 2022. And from there, market shot up from 15,200 till 18,000. So we saw a rally of 20%. So that kind of performance can be repeated if FIs are again turning into buyer, and they are again forced to cover the short positions. So these are some of the triggers which make a market attractive. So I have a very balanced view of the market. I'm not completely biased towards short positions. I'm not completely biased towards long position. I have just a view on basis of data, on basis of technical levels, on basis of macro picture. All the views discussed are for educational purpose. I'm not suggesting you to create any long or short positions. It's up to you. Consult your financial advisor. My purpose is to connect with you, to communicate what I feel, what I understand, to share my readings with you so that even you can learn something. And if you have liked my effort, if you think that I talk something sensible, then please share it with your friends, because share it with your family, with your friends. So probably they can also take some advantage if our view goes right. So that's all for this video. That's I'll keep it little raw this time, and I'll directly share with you. I'll share this video with you all. So goodbye, guys. Nice connecting with you, and do like, share, and subscribe. Okay, bye.